diving into our main topic today, we're going to be covering accredited investor laws. This is all about access into private markets, and there are some rumors that these laws may change to make it more exclusive for any investor here inside the US, and that's going to have significant ramifications for investing in the private markets, and we just cannot wait to dive into this topic today.
In fact, without regulation crowdfunding or Reg A+, it was very, very difficult for the average retail, or as they say, non-accredited investor, was being able to access the private capital markets, right? Angel investment opportunities, real estate investment opportunities, many different investments that weren't available on the public stock market, essentially. And as a result, they classified accredited investors, as the SEC deemed this way back when, basically said, okay, basically if you're rich enough, it's really the crudest way to put it, you can bear the risk and loss of actually participating in what they deemed risky investments into these private companies and investment opportunities. And as a result, back in 1982, they defined the definition of accredited investors as $200,000 a year in annual income for 2 years, or with your spouse, you can actually make up to $300,000 combined, at least for 2 years, and then you qualify as an accredited investor. Or you could have $1 million in net worth, in net assets. That's your liabilities minus, plus, against your assets. And then you also cannot include your primary residence as a part of that calculation, so that your value of your home that you're living in, you can't use in your $1 million net worth calculation. So that's a big deal. That's already roughly only about 10 to 12% of Americans that qualify being able to invest in these opportunities.
And many people feel like that was already pretty constrictive. I mean, you're talking about 10% of the population. Many other countries have more sophisticated investor laws around education and some of these other components that don't necessarily have to be in line with your net worth, whereas as we've seen here with the US, for the SEC, it's really all about just that net worth calculation. And so at least what we saw in the developments in the space were the crowdfunding opportunities. As Herwig said, Regulation CF allowing any company to raise now up to $5 million because they've expanded these regulations. They've also expanded the Reg A+, allowing to raise up to $75 million from the crowd, from your retail investors. And we started to feel like, okay, maybe this is going to open some potential doors to create more financial inclusion. And I was only taken a step further when the SEC announced that there were additional opportunities to become accredited,
right,
which is where you could be a Series 7, or some of the investment banking licenses would allow you to potentially be accredited even if you didn't have those net worth calculations that you potentially needed to have. So there were all these opportunities. We were starting to see some great momentum moving forward around whether you could be accredited investors or not, until recently when there was a bombshell that dropped that potentially we're going to constrict that significantly.
Well summarized. In fact, we know quite a bit about this space. In fact, I know quite a bit about this space thanks to my previous business partner, Adrian Alvarez. He was actually the one who wrote this bombshell article revealing this topic today. And actually, it's part of the Token Rookie series that he's launched. You definitely should go check that out on YouTube. That's a very interesting conversation about all things tokens. But this article specifically was on the fact that in the past, we had started an accreditation software company. So we actually provide compliance to crowdfunding portals, investment programs, anyone trying to verify accredited investor status digitally. And as a result, we became very, very familiar with the space. And he specifically, being a JD MBA from the University of Miami, he actually knows the law and the regulation very, very intimately. And as a result, he was sort of aware, after talking to, as well as potentially some people very insider on the topic, saying that the new democratic regime within the SEC may update the definition. And how would they update it? They would attach it to inflation. And with inflation, that hasn't been updated since 1982. So this is where the problem falls in, right, Kyle? We saw that actually if we were to adjust, we would actually see that we would have an average income for a credit investor solo of $565,000 a year for 2 years. And then, of course, combined, we're looking at $848,000 combined as with your spouse. Again, you have to do that for 2 years. And at the same time, if you want to qualify on the asset threshold, again, without your primary residence, you will need to qualify for at least $2.8 million. We're talking about easily cutting the 10 to 12%, maybe down to 3% of Americans that can actually invest in private placements as a result.
And I gotta say, I'm really not a fan of these potential opportunities. And certainly, the SEC will do what it needs to do as it feels to protect the average investor. But when you look at just so many opportunities that there are to blow your money, to be quite frank, you've got lottery tickets, you've got gambling, you've got all these crazy opportunities that we don't subscribe to only accredited investors. One amazing way to create wealth for yourself is to participate in capital markets, to invest in early into some of these deals. And I just think that this is really a constrictive opportunity that doesn't actually encourage innovation in the US. I think that this is only going to force, the rich to get richer, right? That 3, 4, 5% that can participate are now going to have even more leverage and even more influence on those capital markets, and are going to have less focus on creating more wealth opportunities for more of the general population. So, we'll see how they do. I know what I think that their line of thinking makes sense from, adjusting these things based off of income. But if they're going to do something like this, I would really hope that there's an opportunity for those that aren't falling into those income levels to be able to become accredited in a streamlined process that doesn't necessarily force you to become a broker, which again is also pretty constrictive. So we'll see. It's interesting, but it's really going to potentially, I think, hurt the U.S. capital markets in the long run.
Yeah, at least we saw some expansions with being licensed as an RIA or an investment banker, but at the end of the day, that's a very small subset of the population. So to your point, hopefully we see some further expansion if they were to move forward with this adjustment. And how would that look like exactly? Well, the SEC would have to come out and say, we have a plan to change the accredited investor definition. So maybe they could do this maybe as soon as September, maybe later, who knows? But at the end of the day, they'll come out and say, this is our plan, and they'll say exactly what their new numbers are. But there is as a part of it will be a comment period for any one of us to actually participate and give our voice. We've been cited before, so they definitely do pay attention, and all of us need to let them know that they need to keep the thresholds where they are and even expand them further to make it possible for more people to participate in private placements, at least under our opinion, right? So if you feel that way, definitely look out for this. We'll be aware to let you know, because there are huge ramifications. I agree with you. Less investors means less innovation getting funded, less startups, making it harder for entrepreneurs to raise capital and build businesses and create jobs. And furthermore, it might actually create a little bit of a push towards crowdfunding, because it will become one of the only means that you can actually feasibly raise capital to get your project started and get off the ground. So there is that one bonus. But the comment period, how long would that last? Probably around 3 to 6 months. So we're looking at maybe the earliest changes happening in March of 2022. But at the end of the day, hopefully we can stop it where it is with a lot of commentary on their when they actually let us know what the actual changes will be.
And I think that that's a wrap for the accredited investor definition, where we are now, where we potentially are headed in the future. Follow us everywhere: Twitter, YouTube, social medias. Go on stomarket.com to find out more information about trading tokens. Go to the What's Drippin' newsletter to find out more about our newsletter, talking about casual tones, updates in the space, and all of our other awesome media properties. You can check it all out on stomarket.com and all of our different media properties.
You can always reach out to us with feedback, questions, suggestions. We're available on LinkedIn and Twitter always. And of course, we'll catch you next week, and happy tokenizing.